Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen along with our co-host Anthony Faso. We just wrapped up our interview with Cynthia Spirlin, who is the tax lien guru. Anthony, what were some of your takeaways?
I would tell you, to be honest, I really didn't know much about tax liens, and I've actually been some clients have been asking about them. So for me, this was a good way to learn about tax liens, what they are and what they're not. I didn't even know there was a difference between tax liens and tax deeds. So to me, I learned a lot. How about you, Cam?
Well, it didn't surprise me that you didn't know anything about tax liens or deeds, to be honest. But my takeaway would be kind of her piece on generational wealth. I really enjoyed her story about one of the examples that she saw her dad setting when she was a young girl, and how that has transitioned or translated into the role that she plays today with helping people kind of do what they do on the financial part of it. And the connection between what we help clients do, getting in a cash position and looking for opportunities, is I see this being a great opportunity for people to create some passive income there is some risk, but kind of a low downside there if you understand what you're doing. So really enjoyed it.
And really, with infinite banking, this isn't an either or. Do tax liens or infinite banking. Actually, you can actually do both, and by doing both, you actually end up with more cash at the end of the day.
Well said.
Thanks. Enjoy the interview.
Take care. All right, Cynthia, thank you so much for joining us today. I look forward to our discussion here on tax liens. Like Anthony had just mentioned a minute ago, we've got clients that continue to ask us kind of about this area. And so we've reached out to you to kind of bring in and enlighten us on that. Can you tell us how you got started in tax liens?
Absolutely. And first, I'm so glad to be here. Thank you for inviting me to participate in the podcast, Infinite Wealth podcast. It's a really exciting opportunity to talk to you today about tax liens. My daughter always says, "Mom, enough with the tax liens."
It's like me with Anthony and taxes. I'm like, enough already.
Right. But I got involved with tax liens after the crash in 2012. I started looking for a safe way to invest because that mortgage crisis had really thrown me for a loop. And I had been investing since 2002. So 10 years later, I thought, now what? Do I give it up altogether? Is this a dead industry? Where can my money be safe? So to answer that question, I started researching and I discovered tax liens and tax deeds. And I've been passionate about it ever since because it's a well-kept secret. A lot of people don't know about them or understand them. So I started sharing my information, what I have found with my friends, and they're like, "I've never heard of that. Tell me more." And it was on after that.
So what was it as you were looking? What was it that first, if you could you tell us what a tax lien is, and then what is it about tax liens that really drew you in?
Yeah, tax liens have been around forever. They come about because there's a lien on our property that's kind of invisible. The government really owns everything, period, end of story. So,
Well said.
Yeah, they let you use the land for a period of time as long as you will pay your taxes.
Pay your rent.
And so if you refuse to pay your taxes, then they have a solution for that. It's called a lien. And their first position always, even if you have a mortgage on your property, they will supersede the mortgage on your property. So if anyone has a mortgage, first, second, or third, they want to protect their interests, they'll need to pay the property taxes and pursue you for that later. But in the meantime, the county needs the money to run the city. They have a budget that they use based on income from various sources, including and especially property taxes. And if they aren't paid, then that throws the budget off. So they said, who can help us with this? Investors. And we'll give them a great deal. So enticing. 12%, 16%, 18%. It's crazy. And so, of course, your money is extremely safe. You're in first position. And there's two choices in a tax lien. Either the property owner repays the money plus the interest, or they foreclose and they lose their right to the property. And now you can take it over. So in some cases, you could buy a property for $2,000 and it may have a value of 5,000, I'm sorry, 50,000, 100,000. It's really incredible how the wholesale price, because the property tax, the county just wants the money. They're not interested in the value of the property. So it's not emotional at all, which is nice.
Mm-hmm.
And it's safe. It's just really safe. You either get your money back or you get the property, and then you'll have to go through a few more hoops, but you still get your money back.
Now, I heard you say a couple really good things in there. Number one is that jumped out at me. Could you clarify on, you said 12, 16, 18% returns is, could you give us some more information on that, and why is it vary?
Oh, sure. So different states have different laws about that. So some states are known as a lien state and others are a deed state. So if a property is sold at auction or as a tax lien, then it's for the interest. So for example, Arizona is a tax lien state and they pay 16% to the investor that wins the bid on that tax lien. So like, for example, we have a field trip. We're taking a virtual field trip to Arizona to buy some tax liens, and you can buy them for as little as $200 and on up from there. But no matter what, it pays 16% interest. That's over a 12-month period. So if the property owner redeems the property halfway through at the month 6, you would earn 8%. But it has to go the full 12 months to earn the 16%. On the other hand, there in Alabama, they had up until this year, they were paying 12% interest, and they voted and they lowered it to 8%. So then that may have turned some investors away from investing in Alabama. On the other hand, there are deed states like in Nevada. It's a deed state primarily. So I had a student recently that bid at the Nye County auction over near Pahrump. And so she bought some land and she won the bid. Starting bid was $800. She won the bid at $2,000. Properties were $29,000. So there's lien states, there's deed states. California is a deed state. Now Texas and Georgia, they do it a little bit different. It's called it's a deed state, but a redeemable deed. So in that state, you're able to bid at the auction and win the deed. However, the owner has a period of time, say 12 months, that they can redeem the property. That means they would have to pay what you paid at the auction plus a penalty. In Texas, it's 25%, and in Georgia, it's 20%. So it's not a good idea to invest much in renovating the property until that period of time has expired.
What does it mean to redeem a property?
The redemption is a period of time that the county or the state by law allows the homeowner to recover their interest in the property. So for example, with the lien, some places have a 12-month period and it can be up to 36 months that in a lien situation, you put the money out on the property and you are aware, reading the rules, of course, that how long your money will be tied up. So Arizona has a 3-year redemption period. So you invest in the tax lien and the person has from the next day to 3 years to repay those funds.
Okay, now you'd mentioned 2 types of states, a deed and a lien. Can you explain the difference?
Yeah, so a lien is where the property owner has a debt. They haven't paid the property taxes that are due. So it just becomes a lien on the property. Say after a period of time, 2 years have passed, they're going to sell it, auction it off as a lien. And so you know that what state you live in, it's clear that the law, it's already stated that it's a lien state. California and Nevada, for example, they're deed states. And that means that it's not about the debt that's on the property, but you actually get the property. They sell the property for the debt. So that's how you can, for example, there was an auction in December in Clark County. And so most of the properties started around $8,000 to maybe, let's say $40,000 was the bidding price. well, when you get to the auction, people get real excited and they overbid. But you can generally buy properties for, a fraction of their value at an auction in a deed state. So after the auction happens in a deed state, you receive the deed to the property.
Okay, so let's do a little example. Let's say Cameron has a house. Let's just use round numbers as $100,000. Okay, and this guy's not paying his taxes because he's spending it on hair product. So let's say he owes $5,000 in taxes.
Okay.
So they're going to charge him penalties, and if he still doesn't pay it, then they're going to say, okay, we're gonna put your house out for auction. And if I come swoop in there and I win the bid, then I'm going to own Cameron's house. This is sounding great. Like, I'm super excited.
Yeah, you seem really excited about that idea.
Okay, so now what happens if there's a mortgage on there? So let's say there's a $80,000 mortgage.
Yes. So it's important for part of the process before a house can be put for auction, it needs to go through a notification period. And that's really important for proper notice to be given to someone that's on title. Because if not, then if Cameron has a mortgage and it's they're not properly notified, the mortgage company can sue for the property back because there wasn't due process. So it's a process they call due process to notify anyone that has interest in the property repeatedly. And so then it's for them to pay that. So like if I was a mortgage holder and I was owed, I was securing the property for $80,000, it's important for me to protect my right and at the minimum pay the taxes before the house goes to auction.
Okay, so in this example, Cameron's, as long as it was properly posted, is that like in the newspaper, I assume?
Yeah, so generally it's in the newspaper. So if not, then anything below, it could be anything below the first lien, second, third, they would be extinguished from the property. Yeah, that's what happens.
Okay, so I'm trying to formulate my question. Ideally, if the mortgage company is gonna be like, hey, this Scamigi Cameron's not paying his property tax, it'd behoove me to pay it.
Absolutely.
To pay it off to keep that first lien. Okay.
Exactly.
But
yes.
I would assume sometimes things fall through the cracks, and then I can buy Cameron's house for whatever the bid is, and then his lender is out.
Right. So if something falls through the cracks and they were not properly notified, there is a 12-month period that they can come back and bring a suit and say, I want to sue for my rights were taken away and I want them back. So it would become a suit. So like in California, they're a deed state and it says you win the bid after the auction, but they still say, be careful, do not make any significant or material changes to the house, because say if it had vinyl flooring and you decide you want travertine in there, then
vinyl flooring.
You will be leaving that travertine tile behind if they win their case.
Okay. Wait, Cynthia. Okay, so I've got a lot of issues with this scenario here.
I'm good. I'm ready to buy it.
But number one is, what if I show up? Am I able to show up at the auction and make a bid on my own house?
No, because what happens is you have notice all along. So up until a period of time, they'll say to the homeowner, the property owner, you have until this date to clear this up, which is usually the day before. So a lot of times when you get to the auction as an investor, you would have researched the property, done your due diligence, and then you find strike. It was taken off the list. And you're like, oh, I really wanted that property.
What can you touch on that due diligence process? Is Anthony able to come over to my house and peek in my windows and start nosing around my property before the auction?
No, generally they do have some states have different rules, different counties have issues with that. So they will forbid any type of behavior of interfering with the homeowner's possession and enjoyment of their property. And others don't have any rules about that whatsoever. But in general, you're not supposed to trespass on another person's property. So when you're doing your due diligence, you can get as close as possible. Usually I will go across the street, but I won't be on this right in front of the property, just close enough to take some video or snapshot photos of the house. Google is a great way. I invest away on the East Coast, Southeast. So a lot of times I have to depend on other people or resources like Google Earth and that type of thing to see the property. But you can't always rely on that because, like, for example, they could actually have information that there was an improved property and then come to find out that because the property was in disrepair, the city bulldozed it. And so it's just a vacant land there, not improved at all. So there's problems with that. One time I remember I had taken a trip to Atlanta and drove over to Birmingham to look at some properties I had seen online that were available. And I thought, okay, this looks like a nice neighborhood and this will be a good investment. I'm driving and I'm thinking, yeah, this is great. I get to the end, it's a really nice community, but I turned right and then I turned left into like this dogleg street. And every house in the community, every one of them was pristine, very nice, except for this street had 4 ugly, ugly houses that squatters were living in everything like a nightmare. And so you wouldn't have known that without. So doesn't mean it's not a good investment, but it wasn't what I thought. And that happens a lot but usually it's not a real big problem because the properties you can get them for so little that there's room. But typically when we're talking about due diligence, then you add up everything that you can foresee cost-wise with the property, expenses, you don't want to exceed 25%.
Okay.
Just to be safe.
Okay. And how much money would somebody need to get kind of started in this? I guess if you could, is there a different number for tax liens versus tax deeds? Should you have more or less?
No, it really depends on the state. Like
Okay.
California, taxes are very high there. So if you're wanting to get started, you might have to start with land in Bakersfield or Barstow, so areas that aren't that in demand, just because for that reason, they're going to be more expensive as opposed to one of the reasons I like Alabama, Georgia, Florida, you can get a real home for like $10,000 or less.
If we pursue down the example of Cameron's house that I come and swoop in as a savior and buy it, is the exit strategy to flip it? Is that typically what you're doing?
It depends on what your personal portfolio you're wanting to accomplish, what goal you're looking to accomplish, because you can have the best of both worlds. For example, there was a associate that bought a property in Georgia at the auction for about $6,000. The fair market value was $140,000, but it needed $50,000 worth of work. So into the property for about $60,000, and in repairs, it rents for say $1,200 a month. So there's equity in there. So instead of selling the property, you can keep the property and pull some cash out of there, and you still within that equity that's remaining, and still have monthly income coming in to cover that note. And you can take that money and invest in more real estate or liens or deeds. Yeah.
So that's deeds. Yeah. Now liens work differently. You want to explain how the lien state would work? Let's still stick with Cameron's example. Okay, let's not let him off the hook. All right, so he owes $5,000 in back taxes.
Yeah,
and we're in a lien state.
Right.
Okay, so then what happens at the auction?
So at the auction, someone wins the bid on that $5,000, and there's, say the interest on that would be 12%, for example.
Okay.
So Cameron has time to repay the $5,000
Mhm.
and bring back 12%. And that's what typically happens. Typically, the person is like, oh no, I don't want to lose my house over this. So they will go and find the money somewhere. So 90%, it's really for people that want to earn interest and just keep turning that money over again. So they're like, say, for example, I have friends that they have pension money, 401k from an old job, and they're sitting there $50,000 just sitting aside. And they're like, I don't have time to deal with it. On my new job is so demanding, and I just hate that I don't know what I can do with this money. So obviously, they need to talk to you guys about
Good
infinite.
answer. Good advice. Good advice.
Step one, I like that.
So step one, they need to get set up with that 50,000 and get it safe in place where they can move it around and grow. And so then they can turn around and invest in the tax liens where they just want their money to grow. So it goes out, checks come in, and it just cycle that money back and forth. But if you really want that's more hands-free way to do it. And if you want to get dirty and hands involved, then and ownership and creating some cash flow. So you could have a mixture. You could have, one account that's building the value and growing on one hand. But if you want to create some additional income for the future, it's a great way, especially if you're older, like 50 years old, not that that's old, but older, and you're concerned about your retirement at this point. How can you accelerate the growth? Then tax liens are a good way to go, because I've seen over and over again that you can literally buy a home for about $10,000, and within a 10 to 12, maybe 13 months, it'll cash flow for you. You'll have received your money back, because typically the scenario I find in the Southeast is that the taxes base is very low, and the typical home there is between $70,000 and $100,000. So if you bought a tax lien on a property for about $5,000 to $7,500, and the property's worth $60,000 and maybe needs some attention, lipstick on a pig, then you have all that equity and you have cash flow coming in too. So it's a good combination if you can get that going.
I was going to jump in there and say, okay, so what I heard you say, the scenario was Anthony has fronted $5,000 that I was in back taxes, and he's owed 12%. Do I have to drive over to Anthony's house and pay him, the investor, off? How does that?
You know where I live.
You bought my house. You know where I live.
Yeah, I pay my taxes.
How does that process work? How do I get off this hook? Right, this hypothetical hook that I'm on.
Come in and give me a unrolled pennies
on his driveway.
That's a great question, Cameron. Absolutely. That's another nice thing about this for the investor. It's really hands off. So when you're investing in the lien, you put your money in at the collector's office at the bid that day, and when the homeowner, such as yourself, comes up with the money, then they take it to the collector's office, and they pay the office, the treasurer, and then the treasurer will make sure that the money goes appropriately to the investor. So you really don't have to deal with it at all.
Okay, good. But no, so let's say Cameron's continuing with the hair product and he doesn't pay his taxes the second year.
Yeah. So then in that case, right. So remember, we have 3-year redemption. So if Cameron doesn't pay the money that first 12 months and now the taxes are due again, then the investor will need to pay the taxes. Because if the investor fails to pay the taxes, then the county can do the same, put it back up for auction, and now you're going to have to pay that investor 12% plus their money back. So it's just easier to deal with it. So what I advise is that when you buy a lien, you want to think about what's the period of time you were willing to be tied up with this? And are you willing to pay the subsequent taxes on there as well?
So if I'm understanding it, I'm going to pay Cameron's taxes for him.
Yeah.
And then either he's going to pay them with a penalty, then that penalty will flow back to me. But then if he doesn't pay his property tax, then I can take over his house.
Yeah. So then
Okay.
you have the right to foreclose. So you have to take a legal stand and file a claim.
Get
and
out, Cameron.
petition.
Yeah. Okay.
Are you done?
Yeah.
Are you? Yeah. Have
Well,
you got
we
my house
may go
yet?
back to that
Have we-
story
have-
if
yeah.
I think of something else.
Do you have ownership of my house at this point?
Okay, let's say this. So there was a mortgage of 80,000, and let's say there's another lien. Let's say for that hair product, right? So Paul Mitchell is like, boom, you haven't paid. We're putting a lien on your house. What happens to Paul Mitchell?
Paul Mitchell is out of luck. Paul Mitchell should have paid the back taxes so he could sell the house out from under Cameron.
Okay, all right, good to know.
Okay.
Poor Paul. But
Yeah. All right. So tell me a little bit about where can I go to buy these? I've heard you say an auction a couple of times. Is that the only place to acquire these? And what does that auction look like? Is that a physical location I've got to go down to?
Yeah, that's a good question because I think that's one of the reasons that kept a lot of people from participating in the auction for so many years is because you had to be there in person. And generally they were held when people were at work. So it was only a certain person that would be in a position to do this. But now in the last 5 years or so, things have changed tremendously where they're available, many of the auctions online. And so not only can domestically Americans buy the home by participating in the auction, but outside of the country, England, India, Egypt, wherever, they have a special form that they will specifically say that a non-American citizen can buy the property. And so they can participate online. And so they're scheduled. For example, there's certain companies that have grown out of this, and they particularly handle the auction for a county. So in Arizona, they have decided to go with realauction.com. And so in February, the different counties schedule their auction during that month. And so that's when you're able to go online from your home, living room, office, Starbucks in the past before COVID.
Yeah.
And participate in auction. Now, those are specific times. They would say, for example, February 4th, 2020, they did have the live auction, and it happens over usually a few days. So after the auction, there's about a 30-day waiting period, and then they'll release what they call over-the-counter. The liens that did not sell during the live auction, they'll be available to buy called over the counter. And that's where we used to take field trips and drive from Vegas over to Arizona. And we would have studied and done our due diligence. And then we have a list that say, I'd like to buy these tax liens. And then we transact the business right there. Now, since COVID arose, there's no ability to buy over the counter. Until recently, Arizona, for the first time, some of the counties have allowed over the counter online. So we have a field trip coming up in July. Virtually, we're going to buy, there's 2 counties, Yavapai and Pinal are offering tax liens online right now. So that means they didn't sell at the auction and they're available over the counter. And there's a debate among investors if the over the counter liens are any good, because if they were good, they would have sold at the auction.
That was going to be my question is how do you judge what's a good lien and what's a bad lien? Why are there leftover ones?
Well, sometimes it's just that people ran out of money. So,
Okay.
With that bidding process, you might have set aside $20,000 to invest, but either what you wanted, people want certain things. So they'll specialize in a certain zip code. They're looking for property or a certain type. They want commercial, not residential. So given all that, there's properties left over because there's a lot of taxes that remain unpaid. And many times that's why due diligence is crucial, because you can make a mistake and buy some garbage. And so, for example, there was a gentleman that's bought a property. I think it was, he paid $9,000 for it, and he thought he was buying a house. There were two houses side by side with a narrow strip of grass. And so he thought he was getting the house for $9,000. And he ended up buying the strip of grass.
I mean, that's kind of
yeah, laughing at his unfortunate.
He didn't do his due diligence.
Right.
Talk to
And
Cynthia.
some people say, I'm just gonna cross my fingers type of thing. And they don't do their due diligence. And sometimes they're lucky and they'll do really well, and sometimes they lose. So he went to the county and asked them to refund the money after he understood what he had done. What do you think they said?
Not a chance.
Yeah.
Right.
They said, thank you, but no thanks.
Now, interestingly enough, it's another reason people don't invest in them is because so much due diligence can be required. When you look at buying a house and you're looking at the value of the property and the condition, that's a lot easier than what happened recently in the Nye County auction, when the lady was looking at buying some raw land there. And so she had to study the maps of wells and where the wells were in relationship to the property she was going to bid on.
Water wells, Cameron. Okay.
Did you see my face? I thought he said whales. I was like, wait a second.
That's why I make a good team. I interpret things for him.
Right. Yeah.
I was really intrigued there for like 3 seconds.
I was just joking. I didn't think you really thought that. But anyways.
I heard whales. I'm sorry.
Yeah. So due diligence is super important. Super important. Yeah.
Another question there on the auction is, how competitive is it? How many people typically go to these things? How much money do I need to have if I'm going to show up at this?
Yeah, that's why I kind of steer toward the over-the-counter liens, because you don't have that frenzy that's going on, right? One thing I need to point out is that, let's talk about Arizona. So you're the live online auction, and you're eligible for 16%. But that at the auction, it's bid down. So it starts at 16%, and then how little interest will you take? So at the live auction, you're not guaranteed 16%. You could get it at 16%, but you have to decide in doing your research and the outcome, what's your rock bottom? So if their bidding goes 14%, you have to say, well, my rock bottom, I would never be interested in anything less than 12%. So then when they go to 10, you're like, oh, well, I'm out. I'm not bidding on this property. I would never say 9, I'll take 9%. Because now listen to this, the investor that's the debtor, the property owner still has to pay the 16%, Cameron. But the investor gets, say, 10%, and then the county would get the 6%.
Okay.
Yeah.
So it sounds like it could be potentially very competitive.
Right. And so, for example, I mentioned the auction that happened in December, I think it was the 5th and 6th in Clark County. They literally had 30 some properties that were available on the day of the auction. And they had over 100 bidders that had registered. It was a $1,000 deposit to register for the auction. And that deposit would go toward the purchase if you won the bid. And if not, it would be refunded, in a period of time. But there were literally 100 plus people there. They filled the room. The chamber was closed only to the bidders. And then outside in the hall, they had a live camera filming, and you could see what was happening inside. Yeah. So, so very competitive when you have 36 properties and 100 people bidding on the properties.
Are these mainly just individuals? Are there any hedge funds that are kind of getting into this market? What have you seen?
Yeah, that's a real problem. I mean, you have the deep pockets investors that are coming in and using that ability to buy, millions of dollars at a time. So for example, that was one of the things that I saw was at the turn of the economy in 2010 through 12 when it was hard hit back then. There were major articles about banks that were recovering through buying the tax liens. And so in Tucson, there was an article about different banks that were not saying I'm Wells Fargo, or Chase or Bank of America, but someone buying on their behalf, $10 million, $40 million in liens.
So outside of that demographic, what does a typical investor look like for you? Age, what are what's their goal? Is it kind of a passive income? Yeah.
Yeah, it's interesting because the country is so diverse that you can have any age be in tax lien investing because it doesn't require a lot of physical movement, or you can buy them online now. So Cameron wants to make a joke.
He said it doesn't take a lot of physical activity. I said that'd be good for you. I looked at Anthony.
Yeah, so it's good for anyone that might have some physical limitations, but it just requires a sharp mind and the discipline to read the dry material that is in the tax lien world. So I think that's the only thing. But what I found is, interestingly enough, where the property values are lower, the taxes are lower. Some people have actually, it's a cottage industry where people make a living as a full-time investor getting these properties low. Say, for example, less than $10,000, they rehab the property and now they can put it on the market for $50,000, $60,000, $70,000, $80,000, for example. Well, that's a good living for someone that in that depressed economy where they don't really have high salaries. You can easily, be a full-time tax sale investor as a business, as your job.
Now, Cindy, you mentioned that this is getting competitive. What do you see happening to this? We're in the middle of a recession, and I think a lot of the government programs is helping and propping up some things, but there's gonna be a lot of people that are going to be out of work or they're going to be taking less pay, and yeah. I would suspect that this could be a good, I won't say good opportunity, but for tax liens that there's going to be more available. What's your take?
Wait a second. Now you got a heart? 10 minutes ago,
your house. I'm taking it.
You were cold-heartedly stealing my house right out from under me, and now he's soft and cuddly. Sorry, go ahead.
Well, yeah, because of the COVID and so many people being out of work, the unemployment, the situation, the uncertainty for so many industries like the restaurants and bars and such. Yeah, everything's changing. The landscape is definitely moving, and people ask me, is it still a good idea to invest in tax liens? Because now think about this. If you're investing in tax lien and you're waiting for someone to reimburse you to pay you the money that you invested, you don't want the property at all. You bought the lien because you wanted the money and the interest. So there is a higher probability that in the past, you were more likely to receive your money. I think now, if you buy a lien, you're more likely to get the property as deeper we go into this situation with the economy. Yeah, but on the deed side, then you are less likely that the person's going to come back because they don't have the money to sue. Now, sometimes, like for example, I did read an article in Georgia. They seem to have had a problem with due process in some of their counties, and elderly people were losing their homes over 25, specifically this lady had gotten behind on her tax payment. And so it was off. And every time she'd pay, they wouldn't do it right. And so she ended up being delinquent $25, and they sold her home for $25 delinquency. And so she's bringing a suit through a legal aid foundation, to represent her in the due process. That doesn't make any sense. So that's something that the counties would have to look at their part in putting the property in that position. Now, I don't want to be the person that always says, it's great, it's great, it's great. I'm the tax lien cheerleader. You know what I mean? There's risk involved. Obviously, the guy that bought that one that didn't do the due diligence. But beyond that, there is the risk of bankruptcy. And so there was a case recently on the East Coast, and so that's a federal level of bankruptcy is. And so in this case, the investor was a capital company in Arizona, and it was time for the money to be repaid because New Jersey's a lien state, and 3 years, for example, I forgot how long, but the person, when it was time to recoup the money, they didn't. And what they did, they filed bankruptcy. So the Arizona company investor went to court as a creditor and said, I don't want any part of this. I am due my money, and just give me my money and I'll go, or give me the property and I'll go away. Either way, just let me have my business out of this bankruptcy. And the judge said no, that the homeowner had the right to, he had to wait in line like the other creditors to give I think she was filing a 13, to give the homeowner time to prove ability to pay or whatever. Yeah, so bankruptcy can be a problem. And that might be something to be concerned with, because if the homeowner uses that to stave off various other creditors due to the economy, then that would include someone that bought a lien on the property, or not necessarily the deed, but the lien could be in that respect.
You mentioned before using an IRA or old 401k, and typically that's at an old employer, or it's at, hopefully it's not at Merrill Lynch, but Charles Schwab or one of those, typical financial planning firms. Yeah. Are they able to do the tax liens through them?
No, they need to move it into a self-directed IRA to be able to control the funds. But one of the problems with the self-directed IRA, unless they have a cash book, checkbook IRA, the checkbook IRA, where they can buy on the spot. You don't have a lot of time. If you're buying at auction, they want the money in a certain time. So that's the only limitation. There's sometimes the IRA funder needs a period of time, a day, 2, 3, I don't know, to actually get the money to you.
Okay.
But usually if they know, I have talked to a couple of presidents that run those type of organizations, and they said if they know what their person is trying to do, they work with them.
Okay, so you work with some self-directed IRAs that will allow checkbook access?
Yes. Mm-hmm.
Okay, cool.
We were talking to a gentleman earlier today, and the question that he had is he had an interest in tax liens, but his question was, how can you get to the properties before they make it to the auction?
That's a great question.
Maybe we should stop recording here. I don't know.
Yeah, this is the real tea right here. This is the T. Listen closely. This is where the rubber meets the road. That's where you need to be. And that's where I spend most of my time, is before the auction, because if you really want a property, then you don't want to be with 100 people that are eyeing on that same property. So in that case, you do want to approach the homeowner and work out some arrangement that's fair to both parties, be a win-win situation. So what happened recently, I was able to be a party to an opportunity where the homeowner wanted to avoid foreclosure before the auction. And so their taxes were barely $5,000, and the property's worth $80,000, as is $100,000 if repaired. And so we took a loan out on the property, so there's no mortgage on there. First position note at 12% for 3 years, as if it were the tax scenario redemption period. So we made it the similar 3-year repayment, and obviously failure to repay will lead to foreclosure, but right now it gives them a chance to stay in their home. And so those opportunities are cropping up more and more so with the property that has no liens on it, so obviously a title search is required. You want to know the condition of the house, the situation of the homeowner. Are they likely to overcome this? If you really just want the income, then that's great. If you want the property, then you kind of have to just wait and see what happens with the economy over the next 12 or 24 months, if they'll be able to really come back, or are they just out of luck and they need to move on.
So my kids would call that like a hack, right? So you just share with us this tax lien hack, and right, and you're sharing those, right? Can you tell us a little bit about, you're teaching people how to do kind of these inside little hacks or secrets? Where can they go to find more information about maybe registering for one of your classes?
Oh, yeah, sure. On Facebook, I have a Facebook page, and so I post information there. It's the Tax Lien Mastermind. And so there's videos there that cover some of the basic overviews that most questions that people have, you can find answers to there. And also upcoming field trips and classes that we're having, I usually post them there as well. Try to make it fun and post interesting news items that are in the industry. It's not a lot of fun stuff happening in tax liens, but I post success of other people. But yeah, just find me there on Facebook, Tax Lien Mastermind.
Okay.
What would somebody learn through this masterclass?
Well, the interesting thing is it's a wide range of people that take the class, and a good range of ages, but I would say typically 30 to 55-ish as the age range of the members, but they come from casino world, servers, medical field. So all kinds of people interested. But I think what really helps, it makes a difference. I like to call it a mastermind because in the beginning, I give the information of the basics and the nuances of it. But then as they learn, they apply their experience from other parts of the country, from their work and their life experience. So when we're doing our due diligence together, then that's where it really comes alive and people can share what they know and their input on a different property. So doing it together, it really makes it fun. So we usually have like 2 due diligence sessions, 2-hour due diligence sessions before we go on a field trip. So it gives a chance for the people that are in the process, in the mastermind, to get to know each other, feel comfortable, and share. And so sometimes people will find a really good tax lien, but it's not. One of the things you have to look at is what your budget is. So there can be a tax lien that's $20,000, it's a great deal, but if your budget's 10, there's no point in looking at that. So if you find something that's out of your range, but you can pass it on to another member, no charge.
And from what I know about your class, is what I really like about it is you're not only just kind of giving them an education, is you're actually taking them to these tax liens, right? These auctions, and helping them to purchase them, right?
Right, exactly. That's what's important, because for a long time when I loved real estate, when I saw what it did for my family, when they witnessed my first creative deal when I was 13. But I still didn't do anything in investing until I was, I don't know, 30. So, it's a long time. Of course, I had things to do, finish high school, go to college, all that stuff. But still, I was afraid, the bottom line was. And so when I really got involved in real estate investing, it was because I partnered with other people. So I know the benefit of, I may have never done that if I hadn't had someone that I had my strength, they had a strength, and together, and we became a mastermind, and we took that deal down and made $50,000. So awesome. I want to apply that same principle. I don't want them to just say, I took a class, I bought a lien. That's what I want people to say. I bought a lien, whether it's a $200 or $20,000, just to say that is a transformation, mentally, their confidence changes. And so that's important. And now that's what people reach out to me for. They took a tax lien course with someone else, and now they're like, I want mentoring, but do I have to pay $5,000, $10,000 for mentoring? No, we're going to use that to buy a lien.
I love that. I don't know. I always hate hearing about stories of people going to these real estate classes and spending 10, 20, 30, 40, 50 grand on just the class, right? They come
Yeah.
out of class and they don't even have any real estate or any assets that they own.
And that's not fair. That should be what it's all about. Come, and when you leave here, you're going to own a home or a contract to assign if that's what you're learning, but an application.
Yeah.
Application.
Cynthia, could you, as we're wrapping up here, could you maybe share kind of last two thoughts here? Maybe one is, could you share a success story that has come out of your master class? And then also, maybe, I know that you've said this before, but you're a big believer in generational wealth. Can you tell us why?
Absolutely, sure. Well, my most recent success story is a young lady about 30 years old. She was so excited to take the tax lien class that she told me on our first meeting that she had gone out and bought a file cabinet and folders, and she was all set to go. And I was just like, okay, no pressure.
Yeah.
But she couldn't wait for the field trip. We had to delay due to the COVID. And so in the meantime, I said, if you find something you want to invest in before we have a field trip, then let me know. So she called, she says, you know what, I'm thinking of bidding at the Nye County auction. I'm like, oh, okay, great, let me know. So we went through that together, and she is so ecstatic. She was able to take $2,000 from the bank account that was earning mere cents and move it over to this property just as secure, but it's raw land valued at $29,000. So she literally, with velocity, has created from the little $2,000, grown it to $29,000. That's a great story.
That is a great story.
And
Yeah.
that's got to be fulfilling to have your students rise and have success, which is kind of like how I feel about Cameron. You know, it's just fulfilling, you know, when somebody you're mentoring does success, right?
Absolutely, because I hope that I tell the students, the members of the mastermind, teach your children this, because it's
Yeah.
very simple process. And if they start young with these kind of habits, then what are the possibilities?
Speaking of teaching your children, again, could you touch on that generational piece? Why is that so important to you?
Oh, yeah. It's really important. Relationships are really important, and family relationships exponentially important. So I feel responsible for my parents' wealth that they have created when I was younger. When I was 13, they had the opportunity to buy some property. They never saw themselves investors, but one of the things my dad believed in, as a barber, you know, barely making ends meet, he always believed in his life insurance, and he paid. The insurance agent would come to pick up the premiums each month. And so we knew the insurance agent personally. We called him by his first name and still know him to this day. But nevertheless, when the opportunity came, my dad didn't have a savings, but he had that life insurance policy. So he pulled the cash value out of there to put on the deposit on the house and this 3 storefronts. And so that property is worth so much money today. It's amazing. It's brought in so much money over the years. It's paid for tuition, cars, you know, everything that we could ever dream of. It covered that and more. So now I'm thinking, I have a child and my brother has a child. So we need to be good stewards over this.
Mm-hmm.
And one of the reasons that tax liens and tax deeds are so valuable to me is that I'm able to protect that. And now I can grow that and maybe double it, quadruple it, because of the tax liens. Yeah, it's important. And so I share this with other people too, because it doesn't matter what your profession is. It could, from hair care to, you know, president of the Paul Mitchell, right? Everyone has a family that they love, and they have to be responsible to use some of their money to grow for the next generation.
What I like about what you're doing and kind of what we do is, man, right, is what we're helping people do is get money in a cash position to go look for opportunities. And what you've just told us about here is an excellent opportunity to turn your money over, right? To create velocity and create some income, you know, passively, or at least leverage it. And no, I really appreciate you coming on here, and appreciate your time. And I know Anthony appreciates you explaining to him what a tax lien is. So thank you.
Yeah, it's been my pleasure. Thank you so much for having me today. It's been a lot of fun. And
Great.
I love to share. I'm totally crazy, nuts, head over heels in love with tax liens. So
Awesome.
it was my pleasure.
And it shows. So thank you for coming on.
Thank
Thank
you.
you.